very good morning to you. Welcome to Trade Live with IG. Back to the OG.
Back to the OG, old school
ONG.
retro, the OG, the AIG. You came up with a new one last week.
AI Angeline.
Good morning, everyone. Funky Given. Good morning to you. Fat Fingers here again. Jugga Jugga. Guten Morgen. Maturin. How is that move going? Maturin's looking for a new place.
Oh, really?
Yeah.
Oh, I'll take the old one. Right, what's coming up on today's show? Let's go right into it.
Right, we got overnight action with myself, old school, and Rich McDonald, of course, and the opening bell too. And then we're going to drive you through all the key movers in fast markets.
And then I have Will Nutting coming in. You remember, Will's been in before. He, of course, runs Nut Stuff, so a portfolio and newsletter. So going to be catching up with Will Nutting there, talking about a lot of things, but Crocs is on the menu.
Crocs?
Crocs.
As in, haven't they been banned in the UK in schools or something for causing too many accidents?
I didn't know that.
Well, we've got John Mayer on Commodity Corner with myself at 9:10, and we'll be talking all things Glencore. And thank you very much, Trader friends, for sending your questions in. We'll get all those surrounding Greater Portland and also Sarabi Gold, and of course the Anglos and Glencores and Rios for you.
And then he's back. It's the man, the one and only. Yep, Beachy's trade of the week. Ooh. So we've got Axel back with the real thing.
Whilst Beachy Head is on the beach.
So, Angeline, the weekend?
It was wonderful, wasn't it? Sun-kissed.
Beautiful.
I checked out a pub I'd never been to in Surrey
All right.
called the Duke's Head.
The God carries on today. Look at that.
Wow, it is unbelievable. And it was when you lot were talking about Fantasy Premier League.
Yes, it's almost ready. I had a little bit of a panic up because I knew the Scottish League had started the week before. On Friday, on Saturday morning, I panicked that the Premiership had started this weekend and I hadn't got my team ready. So luckily...
Last day is the 15th, isn't it?
But remember, everybody, it's Friday. You've got to have your team done Friday afternoon. It is not Saturday morning. And we have a Trade Live with IG league that our wonderful producer... How is he dressed today, Ange? How would you describe that?
He's dressed a bit like Zelensky today. He dressed, like if you put him in a picture with Zelensky's team in Ukraine, he wouldn't look out of place.
Right, well, but I am going to need his help here because my screen has gone down.
Oh,
I've got no screen.
Well, I tell you what, 15th is also a key day. So let's have a look why it's also a key day. I'm going to hit up. So what's happening in Alaska, baby? What's happening in Alaska?
Yeah, take us into what you think is going to happen here, Ange.
Trader friends, what are you doing on Friday? Because I know what Putin and Trump are doing on August the 15th. They are reportedly going to meet in, of all places, Alaska.
Yeah, I think there's a bit of history here around an American-Russian deal in the past over Alaska.
Tell me, because I was a bit confused when
It's a bit of a nod to that.
So for those of you that are watching the space very, very closely, I already had Richie Rich here when I got in this morning going, oh, there's OTC, Russia, beating it right now.
Yes, but any Russian proxies, I'm gutted. There's no Turkish stocks on the IG platform, and I can't find them anywhere. But there's a Turkish stock called Enka. And Enka is a Turkish property play, but they also have properties in Moscow, including Moscow's biggest mall. And I would have lumped into that today, but I can't find it anywhere.
Interesting. I-N-K-A?
E-N-K-A. Enka Insulat.
Right. Interesting.
It was the one when Turkey shot down a Russian fighter jet in 2015. The Russian fighter jet came into Turkish territory, missile up, shot it down. Enka dropped like 15%.
Right.
Because they thought there was about to be a big a kerfuffle between Moscow and Istanbul.
Interesting. Just whacking up my screen here because I've put that up. Is that the right one? Is that
well, yeah.
most admired construction company?
Yeah, the sign's definitely right.
Yeah.
Yeah, there we go. Most admired construction company of Turkey. But yes, big Russian exposure. So that's what I'm trying to start to put together ideas of where we can get Russian exposure. If there was an OTC index, then you would be starting to look at that, because is Putin going to give something on Friday?
And I almost, and this is the Ange antenna here, trader friends, I almost think that he will give something and Trump will also offer an olive branch, because Trump wants, he's not actually made this a secret, he wants to get this Nobel Prize. I think it's an ego thing.
And he deserves it, absolutely. He stopped 3 wars, Angeline.
So there are lots at stake here. First, both of them, or rather, Trump is going to try and repair this failed bid to end this Ukraine war, thus delivering him his much longed for Nobel Prize. But also, this could be a real tricky moment, because if he doesn't deliver on what he's promised, this kind of ruins his image as the president of peace, which he's been trying to sell to the markets. Let's be real here.
Yeah.
So some of the other things that, interestingly enough, there's another date. Apparently, in the next few hours, Trump's envoy, Steve Witkoff, is going to meet Putin in the next few hours.
Right, or one of Putin's envoys. Yeah. So at the moment, Russia occupies about 20% of Ukraine. Of course, Zelensky and Europe say there's no chance of Ukraine giving up land. But 2/3 of Ukrainians want the war to end. So, is there some kind of diplomatic process to go through to get ceasefire, first of all, and then to move on from there and see if you can get full peace.
Bigger Beers chiming in on the conversation, saying there are even communities in Alaska, that's right, that continue to speak Russian to this day. There we are. And also American football. Is this the American Football League? Since American football has started to, or just the American football season?
Right, well, let's go and find out what is happening in this bull market in overnight action. So the most important story of the morning, of course, NVIDIA and AMD will be paying 15% of China chip sale revenues to the United Democratic Republic of the States of America.
Yeah, and NVIDIA also, for those of you watching in space, I know James has got a position, am I right? James in the gallery. On NVIDIA having slight kittens there, because there was another story about, did you see this one, Rich, about the chips, Chinese saying that these NVIDIA chips could potentially have this kill switch embedded in it?
I think that's just a rumor. But the so US government, in an unprecedented move, is going to take an additional 15% super tax from sales of the H20s for NVIDIA, and then the AMD chip that's going in there as well. Let me just try and remember what code that is. But yeah, has never happened before. And look, the Financial Times is not insinuating in any way that Trump is also getting some kind of, you wouldn't call it a bribe. You wouldn't call it a backhander. There's no insinuation in there that, there's anything more than maybe another little trophy like Tim Cook brought him last week. Or there's no insinuation that the hedge fund and investment fund that his sons are now involved in had any prior knowledge
Interesting,
of the deal.
Because we're going to have John Mayer come, bam, bam, bam. Was that the noise that you're going to play, Producer Phil? We're going to have John Mayer come later on, Trader Friends, there we go. And he has seen some blips on the copper market that implies that there is a very timely blip before any announcement that boosts the price of copper.
Right.
Which is very interesting.
Well, and of course, the irony that I am getting towards is Trump going at Nancy Pelosi aggressively yesterday, really waking up and choosing violence, saying that Nancy Pelosi needs to be investigated because she is blatantly insider trading.
A bit rich.
Yeah. Questionable. You know, pot kettle.
Yes. So what's also interesting is on your article there, it quotes the H20.
Yeah.
So the H20 is the one that is being called into question. Reports, swirling around that and the kill switch. If you Google that and H20, you'll find the story. But yeah, this insider thing is really peculiar because he's been live on television going,
it's a good time to buy stocks.
Buy this, get in now.
DJT. Right now, Bernstein analysts estimate that based on NVIDIA's guidance, then it would have sold around 1.5 million H20 chips into China in 2025. That generates about 23 billion of revenue. So we're talking $3.5 billion taken off NVIDIA's profit. And therefore, of course, the Nasdaq's up this morning. Makes complete sense.
Are you so short on NVIDIA?
Well, I'm short calls, but I do not get a world where they've just had $3 billion taken from their P&L and if the stock's up this morning.
Well, does this feed into Dylan's AI supernova that so many people, mom and pops and everyone, are into this trade that they're just not looking at it. It's just a one-way trade. And then Issar also had one theory where there's so much growth in passive investing compared to active investing that, that money is just, motoring in slowly, but motoring in and, making it supported throughout the summer.
I think it's three things. It's the two that you've mentioned and plus the momentum funds. And the momentum CTAs we know are at the 92nd percentile of how long they've ever been in history compared to how long they are now. And they keep on buying this. And because AI was the story of last week, then everything has now gone into AI. It's the only stocks that are now continuing higher. So
yeah, that's a good point, the momentum.
Where do we get to on that?
Yeah, where do we go to? This is a really good dovetail to this chart, which I crunched this morning, Rich. And, this is a quote from Jay Woods, very well followed, very respected strategist from Freedom Capital Markets. He looked at 15 years of analyzed data and said August and September have been down more than they've been up. September, in fact, is a losing month over that time. So we're seeing this seasonal pattern of weakness. But a lot of people are now saying that this may not hold true anymore this time round.
A lot of people are guessing.
Trader friends, tell us what you are thinking. We had a poll on Friday. How was the wedding, by the way? Everyone was wondering, how it all went.
Just so nice, like such a lovely couple. And
where was it?
They had.
Where was it held?
Shrewsbury.
Oh.
So, but let's stick with the important things, Ange.
So,
and the important thing is.
So during that time when you
exactly
were there.
What Boise's just put up, Palantir. Now, I am getting very excited because there, in my experience, there are about 5 opportunities a year to make real money. And Palantir is now getting into that part that I have very high conviction in my ability to put on a position now which will make money. So Palantir getting to the 187 level, that is 110 times sales. They upped guidance by $250 million last week. Guess how much has been added to the market cap? So sales increase, not profits, sales of $250 million How much has been added to the market cap because of that?
2 billion, Terence is guessing?
50 billion.
Wow. Wow.
The market cap
Terence says that was close.
has gone up by $50 billion. And this is in that kind of territory that is so absurd. And there's so many of American retail on their Robinhood accounts that have to buy this thing. Obviously, everybody's raving about it, right? All their friends have made money. And there are people now buying it in the 180s, which is just mind-blowing. And now I'm looking to structure a trade that I will put a significant amount of my account into.
Interesting.
So normally, Axel talks about only risk 2% of your account. And, you know, you put all your safety things around it. But sometimes there are conviction trades that I want to find a nice options structure that I can put, you know, 10% behind.
This is interesting because you're saying this in a time when I'd love to be wrong and say, look, I completely agree with you. But Palantir, each time I think it's not going to go higher, it just tracks higher.
Oh, totally, yeah.
Right? And
that's what a bubble does, though.
Yes. But at the same time, it is the only player in its market that does what it does.
No, that doesn't change the numbers. NVIDIA is the only player in the market that it does. It didn't stop when it went to 150 last year, when it was still 1,500. It then dropped to $90. So this is now 110. Now, 110 price to sales doesn't mean anything to anybody, right? Because we've never seen it before.
It's this brand new territory.
Cisco peaked in the dot-com bubble at 39 times sales. NVIDIA's peak has been 36 times sales. So Palantir could have a 50% increase in revenues next year and come down to 55 times sales, and then have another 40% increase in revenues in 2027, and it'll still be the peak that NVIDIA ever has been. So what's happened is that everybody's seen what happened to NVIDIA. They've taken the price of Palantir and taken it straight to that level that it's going to be in 3 years' time. So this stock, if it has absolutely perfect run for the next 3 years, the stock will still be at the same level. So you're buying a stock that will not go up. You're buying a stock to stay the same when you can get 17% return in a savings account over that time period.
Bigger Beer says, my nose is bleeding. And Boise there, good morning to you. Does it have a final push to 200?
Yeah, it's clearly got 200 in its mind. That's why I want to structure it. So if I'm going to sell a call, it'll be at 210, 220, something like that. But I'll take that premium and I want to buy something that's at the money, like a 180 maybe, 180 put. And I want to find something that gives me a couple of months, 3 months, whatever it is, September weakness, October weakness, but some reality to strike in this thing.
A reality check for the stock.
Yeah.
I'm going to look to Bigger Beers and Maturin because I know both of them come from military backgrounds. For when they start getting really concerned about the stock. Bigger Beer saying, as a former defense contractor, I've seen their program come into the market and wipe the slate clean of competitors. Palantir is awesome.
Also, of course, it's awesome. You don't get to be 110 times sales if you're not awesome. This thing generates $1 billion of revenue a quarter. And it's worth $440 billion.
Yeah. At the same time, we are...
Of course, it's awesome.
We are, we don't see stocks, as we always say here, grow into trees and trees don't grow into skies. So, there is at some point that it is going to have a correction. Then what are you going to do, Rich? Is that buy the dip then for you?
Well, let's have a dip first before we start thinking about buying it, Ange. Yeah. No, I will sell a put lower down to finance, but that's purely to finance the trade. But yeah, definitely, this thing should be 135, should be 140. There's no question about that, because that's then it's on 80 times sales or 90 times sales.
Which is more realistic.
Yeah.
Yeah. Right. On that note, loads of we've seen when the reason why I asked where you were on Friday was because there's lots coming out on Palantir itself and lots of people asking about your position on it. On that Friday, I think it was, Palantir had HSBC raising its target price of Palantir to it was a bit behind the curve. A lot of them all behind the curve
so
now.
Goldman's have got a 141 target. That came out on Friday. 141 is down 24% from here. The average analyst target is down 17% from here, 154.
Yeah. There's a rule of 40 breakout as well that I've seen recently that we are going to potentially see after a breakout, maybe at 20, then it comes back down. That is on Seeking Alpha. Those of you that have a login to Seeking Alpha. But yeah, there's a lot of talk out there that you can't. Right now, this move, it does not justify the valuation.
The people buying this stock do not know anything about valuation. I don't think they know that much about investing, and it's momentum that are. Every time somebody buys a stock, momentum funds continue to buy the stock. So when it stops, it's going to be down 15% in 3 days.
Kathy Wood agrees with you because she sold 28 million Palantir shares.
Anybody who knows anything about the stock markets is not buying Palantir up here.
Bigger B is saying they're expanding into retail, insurance, finance, logistics, mining. Their reach can disrupt the world.
Oh, that's why they're on 110 times sales, Bigger B is. Not 110 times earnings. 110 times earnings would be insanely high. This is 110 times sales. If the amount of revenues that they're generating today, if they didn't pay any tax, they didn't pay any costs, it didn't cost them anything in marketing, it would take you 110 years to get your money back. That is, so of course they could disrupt the world. Of course they're awesome. They're priced double that.
They're priced beyond perfection.
Yeah.
Should we get a poll out of this, people? It sounds like a poll, producer Phil. The question is, do you think Palantir...
Yeah, how much higher is it going to go?
Speaking of how much higher, Smarter Web is indicated higher.
Indicated.
Is it out already? With 8 minutes to the open. We also have...
well, you've got Bitcoin. So Bitcoin's on a chance that it breaks out here. So I'm not actually sure why it's so strong overnight. But it's moved from 116. So yeah, maybe Trump's about to make an announcement on it later today. There we go. So getting towards all-time highs there, which were 12,314. We're at 12,200. But strong move up overnight, 3%. So yeah, I would imagine Smarter Web in theory should go higher on the back of that.
I'm wondering whether Bitcoin is also, moving after Ethereum really roofed the last few weeks. And so whether this is just a, move after that. Lots of others that we are looking at today. Admiral, just ahead. We've got 8 minutes to go. Trader friends at 8 o'clock. Raised to equal weight. Price target 330p there. We've got GlaxoSmithKline as well. FDA, there's some news about its treatment.
There's been a raising, Andrew says, in SWC.
Let's have a look.
It's from the ATM. Okay.
Right. Let's go to Guess the Chart next. Can you tell us, Producer Phil, if this is a UK or US stock? Oh, it's a commodity. Go on then. Is this...
a commodity.
Ahead of John Mayer. Go on. Let's do it. Oh, yes. We've got a new song today. Have you? I've not heard it. They chucked me out of the gallery on Friday because it's not allowed. So it's a surprise. Yeah. Let's do it.
Saw the chart on my screen last night. It was moving like it knew my type. Little breakout with a wicked grin. Pull me in then dipped again. Rich away, but I hit that buy. Angelina wrote her eyes sky high. face, but he's guessing just like the rest of this place. Guess the chart. Do you feel the beat? Could be finance, could be something sweet. Is it punk? Is it dumb? Is it dressed in gold? Only time will tell if the move is bold. Guess the chart got me in a trance. It's a sideways flirt and a risky dance. Could be banks, could be tech, could be clean new start. You don't know love till you guess the chart. I've been playing with my moving lines, drawing trends like zodiac signs. MACD's talking RSI too, but none of it tells me what you're gonna do. Break out, fake out, up and stall. Is it real or just protocol? No crystal ball, just guts and grace. And this candle looking me in the face. Guess the chart, yeah, make your call. One wrong read and you lose it all. Could be oil, could be steel, could be crypto art. You're never too safe when you guess the chart. Guess the chart. The tempo climbs. I've been fooled too many times, but I'm still here, heels on the floor. Guessing charts like never before. Guess the chart and feel that high. One last guess before we say goodbye. It's a game, it's a flame, it's a neon.
Welcome to the exciting world of options trading.
Okay, guys, before I teach you how to use this, I have to teach you how to use this. The mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. Time to go. Hey, come on, Pat, come on. Cash returns, come on. Oi! Oh, you're not going to get better than cash returns.
Hey, trader friends, could you guess that one? Were you checking, Rich? I was looking at you next to me. Were you
I
checking?
was just looking at a range of prices. Can't believe I didn't get it. That's poor.
I like Funky Gibbon. I also guessed natural gas. Then I went to carbon. Carbon. And yeah, bigger beers. I thought maybe cocoa as well, but it is iron ore. And Phil, someone got it done. Yeah, Blue Elegy is the new.
Oh, well done, Blue.
Yeah,
My
well
boy
done,
Blue.
Blue, to you, because you beat Richie Rich. I can't tell whether it's checking, but there's furious typing over there. Right, 2 minutes to the open. Shall we get across some upgrades and downgrades?
Yeah. Throw them up for us, Ange. Go on.
So we've just got a few through, just showing you the charts here whilst I read them through. We had we got Admiral, quite a quiet start at the moment, raised to equal weight at Morgan Stanley. Price
any big
target
ones?
330. It's pretty quiet at the moment. None of the big ones. I mean, none really jump out at me.
Right, let's take a look at the futures market then. So we've got S&P back above 6,400, up 23 basis points. FTSE 100 up 20 basis points, 9,110. You can see oil is very weak this morning. So they think that if Russian oil comes back on, clearly they think that's going lower. Gold, I have not seen a reason why gold is so weak and Bitcoin so strong. That is, I wonder if Trump's going to sell some of his gold to buy Bitcoin. There was the deal signed last week that people could put Bitcoin into their 401ks now, but I don't see why that would be so strong. Right, Ange, you got your bell in your hand there?
I got the bell in my hand. 2, 1, and here we go. We are off to the races. Let's get the screens up.
Right.
Let's have a look.
Let's Bit of a slow open there.
Yeah.
We're gradually getting going.
Slightly risk up the early view here. We have a few more coming through. Henkel, Deutsche Bank raising the target price at to 81 euros from 80, but not a lot of big names.
Right, let's look at the prices. Diageo up 75 basis points. We've got Pru also strong. There was a story in the press this morning, a negative story on NatWest. If you think that them allowing Ponzi schemes to still pay into bank accounts is negative. But yeah, WH Smith going there. Let's see if there's more. Oh, there's a Forexpo. So Forexpo's got that Ukrainian exposure that we were talking about earlier, up 3. Anything else jump out, Ange?
Burbs up 1% there, and we also have the BHPs up almost 1%. Looking out for some of the pharmaceutical names as well, because whilst you were away at Shrewsbury, they had a bit more of a pounding, but AstraZeneca is up 1% there. I wonder what GlaxoSmithKline is doing. Admiral, last time I checked, was not uncrossed yet. Lloyds.
Right, Lloyds, yes. So a terrible week last week after it broke out on Monday. Clearly a large seller in there. So was the large seller working to the end of the week? That does happen very often. Get me out by the end of the week. Well, it would seem at least there's a bit of alleviation on the pressure on that stock this morning.
Some of the losers, BAE Systems, still trying to figure out what is happening there at the moment, down 1.6%.
Oh, well, that's the end of the war, isn't it? If you get
If you believe that, yeah.
yeah.
But we are
Would
seeing...
you buy on weakness if there is a peace deal? What's going to be off 5-6% probably?
Yes, I would, just because it's large. I wouldn't buy the others, but this is quite a large player.
So you think that could be the end of European defence trade if Russia-Ukraine signs a peace deal?
If they sign a peace deal, then I'm coming out of the NATO ETF, but I'm going to remain in like the big players like BAE Systems, because it just has its finger in every pie.
Yeah.
And it's a nice one to have.
So yeah, Rheinmetall down 3% as well on the back of that.
Yeah, so RSAX, if you're on the show, do keep an eye on that, because we did see, you know, European defence stocks extend losses after we had reports of those peace talks as well.
I think I'd buy on weakness.
For BAE, because for me, it's just
all of
because
them.
it's big. You think so?
Yeah.
Yeah.
Because BAE is not really where you're getting the upgraded, you know, it's Germany, isn't it?
Yeah, but that's I've got Rheinmetall already, so
Okay, you've got that.
I've already got.
So you keep
Rheinmetall.
that.
Yeah.
Right.
I wouldn't add.
Okay, SSE down 90 basis points. Stock's not happy this morning. There is a story on the front page of the FT about them paying wind farms to not generate electricity in Scotland, especially windy up there. Got a little bit of weakness in JD Sports. Rolls-Royce down 1 as well. What do you think at home? Is this the time? Is this the turn of Rolls-Royce? Hitting £11. Do you think it's time to take some profit there? Kate Murphy.
Murphy, yeah. Terence is yelling in the gallery as well. Sell, sell. We are seeing that lots of moves lower as well. Not just, we talked about Rheinmetall earlier on, but Hensoldt is also down. Rank is also down. We'll get to the German stocks in a moment, but just watching that because I've got an alert on my watch list. Elsewhere in the UK, looking pretty quiet at the moment.
Okay, so let's look at those European stocks then. Bayer, Kering, LVMH, Deutsche Tel at the top. I was expecting a little bit more strength there, actually. There's not...
No, maybe they're waiting on this potential announcement in a few hours. So.
Yeah. The autos there as well. ASML, 621, starting to have a move there. Having traded 592 last week. I wonder if it's paying 15% of its sales to the Dutch government. Do you think?
Well, it would have to, don't you think? Either way, Ronnie is like ASML all the way. And what's the other one he keeps banging on about? Buying it for your kids, not for yourself.
Yeah, Yeah, he likes that one.
Yeah.
No, I mean 15% extra that NVIDIA's ended up giving the backhanded
Oh,
to the White House.
yeah.
RWE down 60 basis points. Air France. I don't think so, because normally European governments don't start to then take their pound of flesh from companies other than outside the original tax regime.
Well, it might be different now if they think that there's going to be more pain to come. Oh.
To me, either a country's a security threat or not. 15% does not make them less of a security threat. So if you think China is a security threat, 15% does not change that. So you just want money. That's it.
I'm just going to maintain it. Looking at Rheinmetall, there you go. It's popped down 4% there. And Rank as well was the other one that moved a lot lower. Let's have a look at that. Yeah, Rank is now down 3.7% there. The others that we see.
Right, shall we Kate Murphy's saying she took off a little bit of rollers. Right at the highs as well, probably, was it, Kate?
Nice.
11 pounds and what? Right, commodity world. Let's see if producer Phil's iron ore has moved at all. We've got oil, continued weakness there. Natural gas also. So remember, we had Tom Price on, and Tom Price said that's not going to change anything in the oil market. Gas, it might do. Gas is where your potential weakness could be in a Russia-Ukraine agreed peace.
What's interesting is by Friday, if we get something good out of Alaska, does that mean we're going to, all everything is going to be smooth sailing from now on? All bets are off if you think that the Russia-Ukraine, war is not going to continue and there's going to be peace?
Well, it's what, as in, like, for Poland?
Yeah, and
Was
the
it for
surrounding countries, that. Or do you think it's still going to rumble on?
I think it's positive for Central Europe. I don't think it has much effect on, like, us or Germany, apart from the fact we don't have to give Ukraine 50 billion anymore to buy more missiles and defense things.
Weaponry.
Yeah.
Interesting. I'm asking purely because I'm now thinking, what do I do with the NATO fund? The NATO ETF. What do I do with the NATO ETF now? Which
I mean, Europe still has to rearm, but we'll be rearming for ourselves rather than giving Ukraine weapons. I mean, Ukraine has to rearm as well. Apparently, the actual cities of Ukraine are now far more beautiful than they used to be.
Oh, because it's, because it's been, a lot of the ugly buildings have been cleared. Is that what you mean? I read.
Yeah, no, but literally the Ukrainians I speak to go, no, it's beautiful now. Kiev is stunning, which I was kind of taken back by, but yeah.
Interesting. Right, let's have a look at elsewhere in the commodity space, because get your questions in for John Mayer. He is going to be here talking about gold, silver as well, touching on that after we asked Simon Popple about silver. Silver's been doing well in the last week or so, looking like it's tracking or going higher once now gold is stuck in a bit of a channel. And I see you zooming in on the forex space, Rich.
Yeah, so 134.60. What do you think? Of course, CPI this week, that's the big one tomorrow. And that's ahead of Jackson Hole the following week. So we've got basically one chance for inflation to be lower than expected, for Powell, that to shape Powell's speech. Is he going to concede to rate cuts in Jackson Hole? Because I would imagine that was the plan. And let's see, have a look at FedWatch. It is 88% chance now that...
It has come off slightly in the last week.
From 88, what? From 89?
It was from around 90, 91, 92.
Right.
Yeah.
It's still a shoe-in though, isn't it? So, yeah, rate cut there. So that's Jackson Hole will tell you whether that rate cut's going to happen or not. So next week, we'll find out whether there'll be a rate cut. We'll find out whether there's going to be 2, 3, because, of course, that is the place that the Fed likes to set out its thinking going forward, and to give the market an idea from September onwards what the rest of the year looks like.
Do you want to hear the probabilities now at the moment for the most likely next Fed chairman? Have you seen those numbers?
Oh, it's Waller, isn't it? Chart off, thanks, guys.
20% Waller,
Oh, buy those.
19% Hassett, 15% Walsh. I mean, either way, we're kind of, either way, I read a really interesting article over the weekend saying that it's just going to be more Trump say with the Fed, because the 2 others that were put in place by him in his previous Trump 1.0 is Bauer, and who's the other person? There are already 2.
Jack Bauer.
And there's another one.
Do you remember Jack Bauer?
Oh, who's Jack Bauer?
From the Series 24.
I know.
I about 6 months ago, I asked for 24 music.
Ah!
And I think that
Producer
would
Phil.
be great. Yeah, there we go. Our answer, Trump himself. Well, exactly. Whoever Trump nominates, it's really him, because whatever he says is so it's whichever governor
right.
agrees for the Fed to stay independent in the Democratic Republic of the United States. But whatever Trump says. So, yeah, that's why we expect rates to be down at what level, Ange? As low as 3.25% in March of next year.
Yeah.
And then even a chance of 3% in 2.75% even in June of next year.
Yeah, and that's all going to be, supportive for equities, right? In a time when, this is the thing that
if we're down there, then something bad has happened.
it's something bad that, has happened. Or he'll fudge it again. This is the thing with Trump. I just think he's so big and he can control so many markets that he can somehow or another, everyone we spoke to, and even us and Frank and the, Tasty crowd, last year in November, everyone was talking about potential R word, potential recession. Never came to pass in Q1. Didn't come to pass in Q2.
Did you see the jobs numbers last week?
I know, it was weak. It's weak. I agree with you. But my point is,
Well, it's been weak for months.
Yes.
For 3 months.
Yes. And everyone keeps saying it can't continue, but it has. This grind up has continued. And it's global investor sentiment at the moment, according to BofA's August Fund Manager Survey, still showing the most bullish since February, right?
Well, exactly. That's the that's the problem.
Red flag.
Yeah,
We keep waiting.
The red flag is that
Keep
CTAs
waiting.
have it up to the yin yangs. That managers are now the bullest that they've ever been. That retail is fully in, and we're getting, what's the RSI of the Nasdaq and stocks like Palantir. What do we think in here? The future of the Palantir stock price is going to go to 200 first, then down 33%. Right, so we got to make sure that the structure I put on is I can handle it going to 200, so I can absorb the loss. I think I'm down about $5,000 already in my short. So I would take another 5,000 hits to be short up to 200, and then I want to put on the size. So yeah, so I'm not saying 188 is the highs. I agree, the market wants to take it to 200, but then I'm going big.
See, I'm totally with you, Rich. The whole thing concerns me, but I am sat here with money on the sidelines, uninvested, because I'm waiting. I'm waiting for that.
But where is it? It's in money market funds, right?
It's money in money market funds, and I have also got some in cash in a stocks and shares ISA, but just uninvested because I've unwound some positions, and it's just sat there because I'm waiting. In fact, when I was away for 10 days, I was waiting for a message from you going, it's happened, the correction, but that didn't come to pass. So
Well, it did. You just didn't get the message. You were too busy on the beach.
in the middle of the water. But that, the NFP did. That didn't. That wasn't long.
That's 4%.
Ah.
Right, you've taken us on perfectly, Ange. Perfectly. What do I do with that cash sitting on the sidelines? Well, if only there was a podcast which would tell you exactly how to structure your portfolio. And on Friday it came out. The bull, the bear, and the chairman. Guess who was the bear? Portfolio launch day, that's right. It is off and running. The IG Art of Investing model portfolio is out for everybody to see. But it answers Ange's question that she's asked then. So obviously you haven't listened to it over the weekend.
Well,
and it also lets you be a fly on the wall for an asset allocation meeting. Remembering that Chris Fellingham there has been Soros's right-hand man in London at the wonderful Soros hedge fund. That Mark Holden has been investment director of incredible funds like Standard Life, like Mercury Asset Management, right? So these guys have been doing these asset allocation meetings for 40 years with billions of dollars. And now you can watch the debate between the three of us on how to set out a long-term investing portfolio. Is it an ISA? Is it a SIP? What do you do with your money over the long term? Forget the trading side. Forget the, trying to take 2% here, 3% there. We're trying to make 10% every year, no matter what the market. If the market's down 20%, we have to make 10.
And what's the duration? Just let our trader friends know. So when you say
Until
long,
we die. 10% a year till we die.
Nice.
And we cover, right, if you're 20-year-olds, we cover how your portfolio should look as a 20-year-old. We talk about if you're 65, like the two gents, how should your portfolio? But Ange, we target it especially at you, somebody in their 30s. What structure should you have?
The other interesting thing about this is they are both so knowledgeable, but they're also so passionate. So I've seen them in here with Rich as well. And whilst they're waiting to go into the wings, right, we're out there talking and you know, Poppy is obviously the name of his dog, which is his handle. But, you know, he cannot stop talking about how I was trying to show him my portfolio and how I'm diversifying. They're really, really passionate about what they do. So I really, really am very excited for the fourth, because I am very worried now about, you know, although it's getting like 4.3%, I'm kind of thinking, have I missed the boat?
So that's the perfect example, right? We're talking about, and Bigger B, as I see, is your plan sacked if it goes to 500. If it goes to 500, then I think I'm sacked, not my plan, or I'll be working here for free for a long time. But yeah, we're talking about people do not understand the price of risk anymore, right? Because if you've got money earning 4.3% in your bank account, okay, add that, first of all, to the 188 that Palantir is now. So that's $200. Mm-hmm. So in 12 months' time, Palantir has to get to $200 because otherwise you just have your money in the bank, right? Mm. But then there's, on top of that, the price of risk. You have to earn more being in a risky asset than you do in a risk-free asset. And if you don't understand that, please look into it more and ask the question. We'll go into it more. But there's got to be a price for risk, because you can lose your capital. Capital is at risk. In the bank account, it's not. Mm-hmm. Terence says that's not true. Tell me why it's not true, Terence. Yeah, Northern Rock, not one person lost a single penny.
They got it all back. And Kaupthing Iceland as well. They got it all back.
Yeah.
Because I had an account there.
So and that's £85,000, your money is completely safe in the UK. If you've got more than 85,000, put it in different bank accounts. But well done you for having 85 in cash in the first place.
Well done you too. And like Rich was saying, all those people I spoke to in the line outside Northern Rock, the reason why they had more than 85 there was because all these people had maxed out 85 in all the other.
Well, no, they didn't apply when Northern Rock went down.
Well, they basically had, you're right,
It was
it
brought in
came
because
after.
of that.
But my point was all these people had, you know, so much money, but all parked in different banks. That's why they were all lining up outside Northern Rock. Because I'm kind of like, why would you put that much money into Northern Rock in the first place?
Whereas the irony was, I remember going to Lloyd's to take money out to put into Northern Rock.
Oh.
because the government had backed it. So you didn't want to have money in Lloyd's or NatWest or Royal Bank of Scotland. You wanted to have it in Northern Rock because it was the only one where
was backed.
100%, it was like buying gilts.
Yeah.
So yeah, so the price of risk goes on top of, so when somebody comes out with a $210 target for Palantir, that's a 12-month target price. Therefore, if you're buying at 190 today, it's got to get to 210. So if the analyst is saying that's the best possible scenario, then what's the point in buying it?
Yeah.
Have it in the bank. Your money is worth $200 of Palantir today by the time you take it out.
Yeah, without the risk.
Without any risk. And there is significant risk of anybody buying Palantir today could lose money.
You're making me feel better, Rich. You're making me feel better about
Having said
putting that to work. Yeah.
if you watch the podcast, we also give alternative ideas. And those might include things like gold, like copper. Buying the FTSE is not the same as buying the S&P on 24 times earnings. You know, there's a lot of other options out there, whether it's Japan, it's India. The Hang Seng is up 23% this year against the S&P being up 8. But you've lost so much money in the dollar that, you know, you'd be much better in the Hang Seng. The S&P is actually flat on the year in GBP pounds, GBP terms.
Actually, interestingly, emerging and frontier markets this year, I've seen a lot of reports saying that they have outperformed, quietly outperformed. There we go. Those are the links on the site. Hit those buttons for the podcast. Also, don't forget to hit the like and subscribe button. And also make sure that you hit this button here because it means that Rich and I can bring you more of this interesting content. And please share it with your like-minded friends because as we all know, you know, it's great when you can talk about investing and wealth accumulation. You know, accumulation in a time when your money is being eroded by inflation out there.
And then, yeah, just to go back to the poll that we had, momentum is key, going higher, 29% you believe that. So over 62% of you believe that Palantir goes higher. So that's what makes a market, you see? So, yeah, I'm talking about being short, going shorter. But stocks go up as well as down. And 62% of people think it goes up. So,
and 13% only time will tell. Was that you, Phil?
that's 7 votes though.
I know, a lot. Speaking of which, we've got quite a few other movers as well. I'm just scanning this because a lot of others have moved here now. Novartis shares, if you're looking for a winner there, Novartis is up more than 2%. Here we are. Because its trials for inelimab has met its endpoint. And also the other one that I wanted to show you, I think, Rich, you mentioned it earlier, for Rexpo. That's still moving.
It's down 5 now.
Yeah. Look at that. Let's give you to show you. There we are.
And then, yeah, NatWest is unchanged, up 20 basis points. Just to show you the story on the front page of the Times. NatWest still took funds for the Ponzi scheme during police inquiry. Market doesn't care. So, and you can see, is that Phil on his line bike?
It looks like Phil, doesn't it?
Yeah, there is the front page of the Times, and the front page of course, the Financial Times leads with that story on NVIDIA and AMD greasing the palm of the White House.
Well, they're going to need to. JP is spending all that money as well, and Trump is goldenizing the entire White House. Did you see that on Friday when Luke showed the after and before of the White House?
Wow.
So just a reminder, trader friends, it's a down day for many defense names out there. The German ones, the Hensoldt, the Rheinmetalls, rank as well. Also, some of the big movers, up arrow movers. Novo Nordisk up after last week's gains as well. We saw Novo Nordisk come back when, after it been hit because of this cost cutting.
Oh yeah, it had a big day, didn't it?
Yeah, it had a big day whilst you're in Shrewsbury, and it seems it's adding to those gains. Let's have a look at Novo. It was up more than 2% when I last looked, only up slightly there.
Right, we've got Will Nutting waiting in the wings. So, for more nut stuff, join us after the break. And who have you got coming up later?
We have John Mayer, Andrew McKelvey. We will take a look at some of your favorite Sarabi as well. I've already given him a special heads up for you. Andrew McKelvey chiming in saying, Rich, you sure write you about Palantir. You'll have a great Christmas, I'm sure.
Is he calling me a turkey?
You call him a turkey. I can't see the sarcasm on your face or whether that is a straight, straight comment, Andrew. Alrighty then, we will be back with Rich and Nutting right after this, so stay right where you are.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Okay guys, before I teach you how to use this, I have to teach you how to use this. The mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. Time to go. Hey, come on, Pat, come on. Cash returns, come on. Oi! Oh, you're not going to get better than cash returns.
We're watching a crisis unfold in the UK and we need to take bold action. Our stock market, once the envy of the world, is in a dangerous downward spiral. At the same time, the UK is stuck in a damaging savings-first mindset with far too few people investing to build wealth for the long term. With our Save Our Stock Market campaign, we're calling on the government to deliver the urgent policy changes our stock market badly needs. From scrapping stamp duty on UK shares to encouraging a shift away from stagnant cash savings and using incentives rather than penalties to get people backing British firms. And to show we're putting our money where our mouth is, we'll be offering every new customer who joins IG across July and August a free UK share bundle. For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more Brits investing while saving a strategic national asset before it's too late. You can read more about IG's SOS campaign and free UK share offer on our website.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose. Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Welcome back, everybody. So we got Will Nutting on the show. Welcome back, sir.
Hey, Reg. How are you?
You're looking well. You're a bit of a tan there.
What, do you have a tan whenever you go in the... I mean, live in the UK, you have a tan.
Yesterday was beautiful, wasn't it?
Tan, fantastic.
I was on
Amazing.
Chelsea Square at the Wild Tavern.
Only the poshest places for you, Reg.
It was just absolutely perfect.
But in London, London's dead. I mean, there's no one in London at all.
Yeah, you
Markets aren't dead, though.
Not yet. It's strange, isn't it? You normally get that sort of 2-week period in August where there's just no vol at all. But machines don't go on holiday.
But August is kind of like the weekends, isn't it? The weekends now you can turn off traditional stock markets and just look at digital assets, and it's just so reassuring. If you're a sado like me, you can keep watching your CoinGecko all weekend and watch this stuff going up and down like a...
Why is Bitcoin up this morning? Have you seen any reason?
It could be the gold announcement. It could be the gold that, you know, the orange orangutan has worked out that tariffing gold bars that are used to settle COMEX futures wasn't the most intelligent thing in the world to do.
I saw he walked that back, did he?
Yeah, I think he's walked it back.
Right, that's what
I think somebody worked out in the small print. They worked it out. And listen, I think also, you know, I think, you know, you've had that sort of slight pullback over the last couple of weeks. But I think, you know, reality is dawning that we're still addicted to borrowed money.
Yeah.
And, you know, it doesn't matter whether it's the UK government or the US government, you know, the Zimbabweification of economies is going to continue, and there's got to be an outlet valve.
Now, how's the portfolio been doing this year?
We've had I mean, it's been hellishly volatile, you know. I mean, I think we were up 19% for the first 6 weeks of the year. It then went down, I think I went down to down 9, which would have meant that any any external investor would have come around and shot me and taken all the money out. And we're now back up 15. So we had a good run. Yeah, you've got it on the.
That's fantastic.
I mean, I think the reassuring thing about it is that I haven't really sort of been chasing that many of the dreams. I mean, you'll see there's a lot of digital assets in there, and a bit like Raoul, who I know Nick Feingold and those guys speak to a lot. Is the reason I have over 30% of the portfolio in digital stuff now is because you can debate till you're blue in the face whether the Mag 7, which is, I guess, it's swollen with, I think, a third of the S&P's worth, and it's got about a tenth of its voice.
Yeah.
So you think about valuation versus earnings. I just can't add any value on that stuff. I don't know whether to call Tesla Stark Industries or Tesla, a bit like Nick. I can take a 5-year view or a 3-year view on this stuff. So what I'm trying to do, I guess, is to look at areas of the market where I think certainly it's more contrarian. I think areas of the market where you can find a better proxy to own a thematic than just a classic index whipped around mega cap stock.
So take us through some of those names there then.
Well, we were going to talk about them. I think, Bitcoin top left, to me is just the classic. It's the classic offset to the constant printing of money, to offset the appalling demographics, the huge entitlement, and the debt in the West. So I don't think it's much more complicated than that. I think corporates now, I think Connor Smith was saying this morning that corporates, good stat, 1.8 million of the 21 million Bitcoin is now owned by corporates. I think that number is just going to go higher and higher and higher, because if you own sterling or you own dollars on your balance sheet as a corporate, you're ultimately owning an asset. You're ultimately owning something that's being inflated away, and the purchasing power of those dollars is going down. So if you talk to the board of any of those companies, are they ultimately performing a fiduciary responsibility to their shareholders? And I would argue not. So that conversation that Microsoft were having at a board level 6-9 months ago, I suspect that conversation happens in 6 or 9 months again, and I think the decision might be a different decision.
Yeah, definitely.
So I think that's hugely exciting. And then we got sort of special situation stuff like, so the nuclear uranium story, BWXT, great implementer. They put all the nuclear, their nuclear reactors onto U.S. naval ships.
Wow.
Great implementer, fantastic, great sort of mid-cap story. Lightbridge is a here story and a future story for uranium. They in fact report the numbers tonight, and I would imagine it'll be a very, very positive call. But they ultimately have an existing nuclear fuel technology that makes existing nuclear reactors significantly more effective. The fuel burns, or the fuel operates at a much lower level. They're also hugely involved in future fuel for nuclear reactors. So Lightbridge has been a key story for us. UEC, uranium miner. You're clearly having to take a view on where uranium utilization and mining is going. Leonardo is a European stock.
That's the defense name, isn't it?
That's a defense name. So if you take it this year, it's ultimately obesity. Well, that's kind of the market caps on those have finally gone on a diet. AI, clearly we can talk about. The only people who don't think AI is a multi-trillion-dollar business is people who use it to answer a pub quiz. It's just a phenomenal and incredible tool. I have no idea what the valuation of these things should be. And then defense, and my worry is that if there is some kind of come to Jesus moment at the end of this week in Anchorage with Trump and Putin, and the reality of what they need to do comes to mind, then it would be interesting to see how defense stocks actually react. Yeah, because I think longer term, there's no doubt about it, European companies want to spend. You heard JD Vance yesterday, as his enormous motorcade was apparently streaking its way through Oxfordshire, saying that ultimately the US doesn't want to spend any more money on Ukraine, but if foreign governments and foreign countries want to buy US defense equipment from US defense contractors, they'll be incredibly happy to sell it. So that's very noble of Vice President Vance.
And he does tend to be quite noble, doesn't he?
Let's not go there. But fun enough, if anyone wants some good holiday reading, he wrote a book on Catholicism, on his conversion to Catholicism. I don't want to go down any unpolitically correct routes here, but it does give you a measure of he wrote the book, I believe. It wasn't ghostwritten, and it is an extraordinary tome, and it does explain a lot about where he comes from.
Now, going back to your point on AI, do you think that, or when do you think the time to start buying ordinary companies for their margin benefit from implementing AI is, and how long do you think the actual the hard?
So I think this is really interesting. I was writing a piece this morning, and I said that I think I said that it's within 18 months. Most people think your bin will empty itself, the cat will speak Mandarin, and no one will ever have to work again except to post on LinkedIn. But someone's going to have to lay the tarmac in the rain. The nurse, I don't think AI is going to be changing your bedpan.
No.
The man with the digger. So if a robot can't do it, a human has to do it. So I'm kind of looking at staffing companies. I'm looking at equipment rental companies. Industrial kit hire, industrial contractors. So I think the industrial economy should benefit alongside this. It's more of a stock market phenomenon, which is that, if you build it, they will come.
Yeah.
You've just got the amount of money that's flooding into index funds. It's just so much easier to own. And I think maybe even the bigger point is that if you look at the best thematics in the market at the moment, and you're an investor and you stand back, I think the other challenge is that, and I think I've written this quite a lot recently, is that you went back 18 months, 7 or 8 of those thematics, if you look for the best way to play those are US companies on the whole. And that's why I've always loved US equities. I've done it for 30 years, US companies on the whole. I think you're just beginning to see that now maybe become 8 goes to 6. And if 8 goes to 6, the asset allocation implications for that, and you were to get some kind of a resolution to the Ukraine issue, and you were to get some kind of, cessation of hugely expensive power in Europe, then I think that does something to the asset allocation side for European equities, and maybe. So I don't know whether that...
So it's only just begun?
It's only just begun.
Right.
And it takes a long time.
Yeah.
The Ontario Teachers Pension Fund does not move in a hurry. And, I think that's the positive argument for digital assets. It's a positive argue for tokenization. But I think the thematic that I think is most interesting here is I think you're going to see the Mag 7 give way to what I call the Block 7 over the next 4 or 5 years. And I think what you're going to see is, I think with blockchain becoming a more recognized and real technology, I think you're going to start to see 6 or 7 really key protocols emerge that I think will be the blockchain 7. So they will be the block 7. So I'm owning this. I'm owning that.
Yeah, you heard it here first.
But I think Mag 7 to block 7 is a really interesting story. And so I've talked a lot about helium. It's been a disastrous call. I've written an analogy of Siamese twins, which I've taken a bit of shit for. But the reality is that I think that helium, as a fastest growing mobile company in the US at the moment, almost twice as many daily users as Ethereum, yet it trades at a market cap of just over 500 million, and Ethereum is 5 billion. So I think what Helium are doing in the telecom world with real data, real mobile phones, real users, real consumption of broadband, that, in all honesty, is really fascinating when it comes to broadband, to blockchain, because unlike the Bitcoin custody companies and the Ethereum custody companies, which are custody companies, they're financial engineering companies, these are traditional businesses that are kind of sit as part of a parallel portfolio alongside their traditional stock market counterparts.
Now, this is Helium, the coin, not a stock.
This is Helium HNT, the token.
The token,
which you can buy on Revolut, you can buy it on CoinGecko, you can buy it wherever you want, yeah.
Right, we did discuss this, the top 40 most affected occupations by generative AI. So you've talked about the ones that won't be affected. Let's have a look at the ones that will. Now, how do we put this into a trade?
Well, you should just kick me out of the room now, because number 5, I'm screwed, aren't I?
So yeah, take us through the ones there that stick out that could be in actual companies that we trade.
I mean, maybe airlines become more optimized by technology. Telephone operators, ticket agents, travel clerks. I mean, I think these again, to me, are all telemarketers, this is all opportunities for me in the world of blockchain. So when I look at all this, I think that I just see not things that I necessarily want to short because, you know, I think that stuff will take a long time. You know, why is OnlyFans going public? You know, OnlyFans is going public because OnlyFans is core business with all the weirdness. And not that I don't know OnlyFans that well, but if you look at, and you look at the data on OnlyFans and you look at what sells best on OnlyFans, it's a lot of very weird, strange stuff.
Right.
And I think the weird, strange stuff is going to be able to be replicated by AI significantly better than humans can do it. And so I would think that someone like an OnlyFans is trying to sell itself, you know, before it gets disintermediated by AI.
What about an OnlyFinance?
No, it's too early for that.
You don't think? I mean, you wouldn't have to
Only
be naked.
finance.
OnlyFinance. So, as in
Well,
finance.
it puts you out of business then.
Or we start one ourselves, Will.
We start one ourselves.
A subscription-based trading ideas website called OnlyFinance.
I think that's right, but I think you can only have a certain amount of apps on your phone. I think this is the other problem that we have. You know, you sit down on your television, your big screen, and you think, I want to watch something. So you go onto Netflix and you think, wow, that's really new. And then you realize it's from 2020 or 2022.
Yeah.
They're trying to sell you all the old stuff. So trying to find a way of looking at all the stuff that's on offer to us and then having a kind of filtering process. I think that filtering process is still a really valuable thing. And I guess being slightly self-serving, it's a little bit like what I'm trying to do, what Nick Feingold does very brilliantly at curation is be a filter, be an aggregator, be a kind of thought leader, awful word, but trying to collect all this stuff together in some kind of a curated narrative. So it kind of makes sense to people who are sitting at home trying to construct portfolios and trying to outperform the market.
Right, we've got one for you here that that you started taking interest in last week. Crocs.
Okay, so I have a vested interest here. My eldest daughter, Emily, works for Crocs in Denver, in Colorado, and she's worked for them for 18 months, so I have to be very careful what I say. When she first, I hardly knew about them. I knew them as being hideous shoes I would never have worn. And then you and I talked about this, and I went to see her in Denver, and she took me to the factory store, and I went and bought some Crocs. In fact, she bought Crocs for me. Actually, I've never bought them.
Nice.
And then when we went to the store, we looked around. And I said, "What on earth is that company selling stuff at the other end?" They said, "That's called Hey Dude." Now I don't know if you can see.
Hey Dude, as in Hey Jude with a D.
That is a Hey Dude shoe. Okay. Now it looks like a kind of Timberland shoe. It's very light. Crocs paid in 2023, I think, when money was basically free or almost free. They paid $2.5 billion for Hey Dude, and I think, to be honest, it's a brand that they're choking on. And I think this is their biggest problem. And some people might say, looking at this shoe, there's no reason why they aren't. There's a very good reason why they are choking on it.
Or at best, they overpaid for it.
But I think they overpaid for it, and I think they've struggled to differentiate it, and I think they've struggled to roll it out. And it may well just be a case of sticking to what you're good at and not trying to be too diversified. So I have no prior knowledge and no proprietary information, but I would suspect that they're probably having a really good look at Hey Dude and saying, you know, this is kind of like, a bit like, who was it? Kate Middleton had her Uncle Gary. Was it Uncle Gary? You know, who you never wanted to turn up at the family events.
Oh yeah.
I suspect that Hey Dude might be the cousin or the uncle that you don't really want at the family events. So it may well be you suddenly see Crocs only stores. Maybe Hey Dude gets spun out to a separate entity, but I would think there's a value unlock maybe to come at Crocs, and it should be on people's radar screens now, and it's certainly gone from being a cautious thing to me to being something positive. And the margins on core Crocs, they're almost like luxury margins.
Well, so Angeline, I know, wants to have a chat with you about Crocs as well as a couple of other things. So we're going to go to a very quick 1-minute break, and then you're going to get Angeline back quizzing Will. We'll see you shortly. Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind the UK stock market, then we can start to get the interest, and it's days like this. We get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would like cash ISAs to be reduced, not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically, in investing that you can from cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, trader friends, here we are. Well, really interested in all those names that you had to do with uranium and nuclear as well. I too have some exposure in that space, and I am in the spot uranium miners.
Okay.
In terms of a diversified play, because I don't want to, pick individual names. So I didn't want to spend time having to look at each individual one.
Yeah.
Views on an ETF, uranium miners? You like it or don't like that sort of position?
I think I think ETFs are fine. ETFs make money on the whole for the people who issue them. They're not the best way of generating alpha for investors. So I think I'd rather own the sort of picks and shovels, the gold rush, than own the mines, because I think it's going to take a long time. I've been to a uranium mine in Namibia 2 years ago. Chinese owned uranium mine. They're highly complicated things, and so I'm not sure I need to. I mean, I own UEC, I own Cameco. It's more a case of when people come to this space, what are they going to come to? I think the smart, savvy, company-specific people will come to an ASPI, they'll come to a Lightbridge, they'll come to a BWXT, etc. And then for sure they might even come to a Sprott, an SRI, which is an interesting name, which ultimately puts together the whole sort of collectors for these things. But I don't have I think you can own. Pretty much, I think you can own them all.
I'm neither smart nor clever, so I'm very simple. So my main premise, I'm hoping you're going to shoot holes in my theory.
What's your main premise?
So my main theory is that, as a race, as a human race, we're not really dealing with the real problem of climate change and energy. And ultimately, there is only one fix, right? And that is nuclear.
Well, I don't know that's true. I'm massively pro nuclear, but I think solar, I think solar arrays, batteries are absolutely also going to be, very, very significant. And I think it's going to take a long time to build the nuclear. And I think, there's going to be a lot of NIMBYism when it comes to nuclear, increasingly. And so I don't think it's a one-horse race. I think,
Oh, don't get me wrong, I think there'll still be a mix, but I think ultimately we'll wait so long to the point where the mix isn't going to solve the problem anymore, and then there is just one solution, and that is nuclear.
well,
And just to give a baseline, right, for energy.
we may well be able to put solar on the moon and somehow beam it to Earth. I mean, I think there's, I think in the next 10 or 20 years there can just be some extraordinary technologies. But from an investment perspective, would I next door to well, take it as a technology that gets you across the chasm to the other side, okay, from fossil fuels to something possibly in the future that is clean and so far we think pretty safe, then I think nuclear is the bridge, is one of the key constituents of the bridge. And I think you've got to own the bridge, and you've just got to work out what's on that bridge.
Exactly. So the bridge, in my mind, is just, it gives that stable baseline energy, and then you can, do what you like on the top, but it provides the baseline.
The question, I guess, for you is, where are you going to see the numbers support the stock market? Because we know what the stock market is like. The stock market needs positive news. It needs information. It needs to see trajectory. One of the reasons why the Mag 7 stocks are doing so well is because, to be honest, the numbers are still incredible and extraordinary. I think so. I wonder whether you're going to get that with uranium miners, because what happens is that as soon as mining companies start to dig holes, it becomes very expensive. And they don't dig holes with AI. I mean, AI may enable them to do stuff, but it's people and it's energy and it's costs and everything else. So I think that's where you've got to be a bit careful. I'm out of Cameco. I don't own Cameco, and I own UEC because I really like Amir, the CEO. I think he's a fantastic operator. So I think selectivity is key.
Interesting. Talking selectivity, I know that you want to talk about Crocs. Correct me if I'm wrong, I think Crocs was either banned or outlawed in schools in the United Kingdom because it caused too many accidents. But you're here to talk about the stock, I know, and you think perhaps just taking a look at the hourly chart, then going on to the daily, and then, it's had quite a fall from highs seen since July, but going back even further, let's see, this is the weekly view here, trader friends, weekly view, and then on to the monthly. So
this became a phenomenon stock, right? It's the kind of monster drinks of shoes. I think Crocs sell 150 million pairs of shoes and Nike sell 800 million. So that gives you the kind of context. But it's a very it's a very recognized brand. It's very Marmite. People love it or they hate it. I know from my daughter who works there, they have these amazing, they put little badges on your Crocs and you can personalize your Crocs. And I just ordered a whole bunch of Bitcoin Crocs, and they're, it's a bit of fun and they're not hugely expensive. And I believe anyone who works in the NHS or whatever, they wear Crocs because they find them incredibly comfortable.
Easy to get on and off.
Easy to get on and off.
Easy
Easy
to
to clean,
sanitize.
easy to sanitize.
That's it.
So I think there's a huge core market. I mean, I was looking at if you look at the numbers, so 4.5 billion market cap. They're buying back 10% of the shares a year. They've just guided for still really good operating margins. They're paying down 500 million of debt a year. So the valuation is pretty nuts, to be honest, now. So I think if they were to take a write down in some shape or form, you're basically getting a 20% market cap being bought back, and you're getting about a 16% EV to free cash flow yield. So it's not crazy, but 5 times earnings. I don't know. I think it's I think it's probably something pretty interesting.
You sound like you think this is an opportunity that's is looking cheap now.
Well, I think most things are cheap goes with the word nasty. So very often things that are cheap are nasty. I think this is maybe not quite cheap enough yet, but I think it's certainly you're beginning to get to a level whereby I would think that sort of value investors would start to have a look.
When would be a cheap enough? Where would be a good entry level? Just looking at the shares, this is the hourly chart here. Let's go.
I don't know. I think on a price basis, it's impossible to say. I would think probably when they start to talk about what they're going to do about Hey Dude.
Great.
Because Hey Dude is like, it's like, being a swimmer with trying to swim with a sea anchor attached to your ankle.
Let's hold that thought, trader friends, because we just really quickly have to go to all sessions because we are off to the races now. All sessions, of course, here is where you can trade US stocks ahead of the US Open.
Yep.
And so I'm just going to show my watch list, which I've built here for our trader friends.
I want to see your watch list.
And so I love a watch list. In fact, I'm building one that gives Turkish exposure in case we get a breakthrough in those Alaska talks this coming Friday. So we have Tilray up through the 13% there. We've got MicroStrategy, we're going to talk about that, up 4.5%. Mara Holdings, a lot of the, no surprise there, the Bitcoin names, Coinbase rather, the crypto names all higher there. Riot Blockchain also riding higher. And SoundHound AI, for those of you that trade the space, it's the company that provides all sorts of voice recognition software that you often find in cars and an increasingly number of consumer products. Also looking elsewhere, we got Lululemon Athletica there. Yay, go Ange. Those of you following my bet, I've got an ongoing bet with Issar. Issar says that Nike in about 11 months will do better in terms of its share price. I think it's going to be Lululemon. We still have time there. Crossing over to the losers list. Will, do you want to take us through some of the big losers at the top there? So C3.
Silver's had a huge move.
Yeah.
Gold, because I think Trump's just worked out that tariffing gold bars was a really stupid thing to do. I mean, NVIDIA goes up and down up and down out the window.
Yeah.
I mean, JD, China, semiconductor, eBay's had a hell of a good run, amazing run. Oil, kind of, yeah, I don't think there's much particularly interesting there. I mean, it's more just a bit of mean reversion, to be honest.
Yeah.
Gold and silver giving way to digital assets.
Yeah. And I think the digital assets really.
Kind of talking about the ahead of Friday. I call it kind of. I think I repeated what I've written about a month ago, which is what I call the Russia proxies and portfolio plays for peace. So it's NBIS, which is the old Yandex, has been a big play for us. Which we've had a good run with. Vion, still the old VimpelCom, one of the cheapest telecom stocks out there. Wizz Airlines, been quite poor. I think probably one of the ones I would really have a look at. You should put that on your watch list. RWE, German utility, cheaper energy, great for RWE. ArcelorMittal, same again. And then there's the Turkish listings, which you talked about. So you've got Russia's biggest brewery, which is AEFES. That's 3 times. That's a 3 times PE. Russia's largest shopping mall.
Enka.
ENKAI.
Yeah, Enka.
Yep, Enka. And then there's Arcelk, ARCLK.
Sounds like arsenic.
Arcelk.
I'm not sure of this one. How do you spell it?
ARCLK.
Yeah.
And they bought the Russian assets of Whirlpool. So they sell nearly 3 million fridges and dishwashers. So I think those are all quite good real world Russian proxies. So I kind of have a portfolio, I have a little list, we have them in the fund that are kind of my barbell approach to what if piece. And I've just in fact going to publish in about an hour's time.
Nice.
I wrote quite a big piece ahead of Friday and trying to be constructive and positive about what I think will come out of Friday.
Nice. So just trader friends, just as you're talking, hearing him talk about Arcelk and the like, I'm also building this watch list, which I'll show you in a moment. But just an update on the conflict so far. 19% of Ukraine currently still under Russian control. Some reports saying 20, but it's that ballpark figure. And some of the key dates for this diplomatic timeline in the next few hours, we're expecting Witkoff to meet either Putin or Putin's envoys in Moscow. But of course, the key date key date, trader friends, is this coming Friday when Trump has said that he'll meet with Putin in Alaska.
In Anchorage, yeah, exactly.
And so this is really interesting because we talk a lot about having these sort of trend trades in mind prior to the event. So we had like a pre-election outcome watch list. What if Trump wins again? What if it was going to be messy? What if it's Kamala? And now building this what if. I was just going to call it a, Turkish-Russia watch list, but that's, what if peace watch list sounds a bit better. What else are you looking at other than those key names?
I'd like to be able to buy options on Donald Trump winning the Nobel Peace Prize. Please.
Well, maybe that might be something you might be able to do soon on the IG platform because we are looking at events. This is not yet something that is confirmed yet, but we are looking into offering events.
Yeah, totally.
So we have to wrap because we're running out of time. But I know
You want to talk about Bitcoin? You want to talk about Bitcoin?
Yes, that's right.
So Bitcoin, Ethereum miners. I mean, I think this mining space is really difficult, and I think if you're going to invest, you've really got to own the very best companies. So
if let's say someone's listening and they already have Ethereum, but they think they want further exposure, would you say
they want the sex and drugs leverage version of Ethereum is BMNR,
and rock and
which
roll.
is Peter Thiel, Stanley Druckenmiller, Tom Lee, Bill Miller, Cathie Wood, and the problem is you've really got to dig in and work out the financial engineering that goes on behind these things. If you look at MicroStrategy and Saylor, who created the genre, you look at BMNR, you look at AltBG, which I think has just been renamed. None of these have short-term debt. So the concept of liquidation, unless you've got a 3 or 4 standard deviation event, I think is highly unlikely. And so I think these wrappers are going to give you, they're going to give you Bitcoin or Ethereum on steroids. But I think you've got to be incredibly careful and really know what you're doing. And even I sometimes find I'm looking at these things thinking to myself, okay, I'm just going to defer to, George or Max or the guys who work with me who really do understand and really understand the engineering side of these things.
Fantastic. Right, we have to wrap it there, but such a pleasure having you on.
Thank you very much indeed.
Thank you for the names for the Turkish ones, because I will add that to my watch list. Yeah, so it'll be fantastic to see what happens this Friday.
Great to see you. Enjoy your summer.
Yes, well, and do let us know, your newsletter as well, because I'm sure a lot of our trader friends would love to.
Well, Nutstuff, www.nutstuff.co.uk. Sign up, you get a free trial. We'll send you an email. And sign up, because I think the Russia piece.
Very prescient. We've got that on the chat as well.
The Russia piece I think we've written today is the Ukraine piece is really good and useful.
Fantastic. Thank you so much. We will look forward to welcoming you on again.
Pleasure.
Right, stay right there, trader friends, because we have John Mayer, star mining analyst, up with us next from SP Angel.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind the UK stock market, then we can start to get the interest. And it's days like this, we get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would like cash ISAs to be reduced, not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically, in investing that you can from cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash.
What
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Okay guys, before I teach you how to use this, I have to teach you how to use this. The mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, minds are ready? Time to go. Hey, come on, Pat. Cash returns, come on. Oi! Oh, you're not going to get better than cash returns.
Hey, trader friends, welcome back. And your favorite guest, John Mayer from the mining space, is with us. John, good morning to you. How are you?
Morning. Yes, I'm good. Thank you.
Really impressed that you're Clark Kent, Superman, whizzing around the morning, getting your note sent out, getting quickly changed, getting camera on, and here you are with us. Really appreciate it.
Yeah, no, it's always a busy morning, especially on a Monday.
Loads to talk about. Many of our trader friends here, as you heard earlier in the show as well, all asking, all of our very valuable guests what the mood music is on your side of things. Are we going to see this, summer correction come online, or are we going to be disappointed, those of us waiting to buy the dip?
Well, on the higher risk stocks, and there's no doubt junior mining is classed as higher risk. In the middle of the summer, there's always a bit of a summer lull, the liquidity falls, prices tend to drop, traders become very defensive, hedge funds go risk off. There's all of that, and just about every single year, we see depressed prices and we see opportunities. And then, of course, add into the mix all the stuff going on with Trump and tariffs, which has really thrown a lot of economic reality up into the air. Risk off guys have gone even more risk off. And I know of a number of, should we say, high rolling traders who've just said, right, that's it, we're off on holiday. We don't want to be here anymore.
It's also kind of interesting, right? We've got two camps here. There's one camp saying that actually the whole surge in the passive investing, the ETF space, plus, these momentum following funds just mean that we're seeing this constant support and trickle in of money into, for example, the Mag 7 and of course indices, tracker indices as well. Do you see this continuing throughout the summer and of course this year as well, or do you think at some point we're going to have a really, really painful move lower when they start tracking the correction and we then see an amplified effect?
But generally we expect to see a recovery into September, through September, and then at some point in September we start to worry about October, because October is a sort of witching hour for certain options expiries, and we worry about is there going to be a crash of some sort. I know there's a lot of news on YouTube about China having an economic collapse, but they seem to have been doing that for some years now. It's always possible that we might see a Russian economic collapse. That's especially if they manage to impose tariffs, or sorry, impose restrictions on India trading Chinese oil, Russian oil. But of course, the Chinese are still going to trade Russian oil. So there's a lot of things that you can't, the West seems to be powerless to stop, although it seems to be effective in having some impact. But I really can't see why we might get outright collapse this autumn. So I think I think there's going to be some more recovery. What does worry us a little bit is the tech market, because that's been flying so high in the States. But then if you look at the earnings coming off these tech companies, they are still very, very good. In fact, they are the outliers on the upside. And if you look at the more industrial businesses, yeah, they've been hit by the uncertainty from Trump's tariffs. So I think we're going to see quite a lot of tough, very difficult Q1 earnings reports from the industrial companies. But the tech side is still going to push the market higher.
And each time we think that they might, stop R&D investment, they just keep plowing on into the AI investment. It's incredible. Speaking of incredible, gold. I almost called you last Friday. When gold was absolutely, gold futures, hitting that record high. Just putting up my chart there in case you haven't heard. It was moving so rapidly that our gallery people cleverly cut that Spandau Ballet gold clip as well. This move on the future side, for trader friends, if you are not aware of how to switch that view, you go to the top left-hand side, I'm showing you right now, switch over to futures, and there you have it. That is the December contract there for you. Is this just a blip, or do you think we could well see, further support after this Trump's tariff blindsided the global market on Friday? Or do you think maybe it's going to be taco once again?
Look, I think gold, the rise in gold prices is pushing on an opening door. It's a market that wants to move higher, and it's consolidated at the current level. But still, there are a lot of people in the world who don't really know where to put their money right now, and gold is a default currency. You could say Bitcoin's a default currency, but there's still plenty of us that don't really trust anything to do with crypto. And maybe we're dinosaurs, and we should get with it. But gold for us is
prior to 35, you entered trading or investing via gold, and if you're over the age of 35, then you entered it through gold.
Yes, exactly. And diamonds are not really such an option anymore, because the diamond market is under attack from lab-grown diamonds. So that's not seen as such a good store of value, although the larger natural stones have actually held value. But gold definitely is still where the money's going, and there's quite a lot of new cash going into silver as well, because there's always a gold-silver ratio, although silver is very much the poorer cousin. But yeah, I mean, with the potential tariff on Swiss 100 ounce and 1 kilo bars, that's something that is going to help a market that wants to rise all the more.
The thing with what I found fascinating about the story is actually if they wanted to get round it, they could easily, Switzerland could get round this tariff issue by just sending gold bars elsewhere, right?
Yeah, I mean, traders do remarkable things, and there will be traders in Dubai who will be very happy to buy Swiss bars without any tariffs, because there's no tariff there, melt them down and make them look like they come out of Dubai, and then sell them into the United States. So I think this is a really difficult one to police. And again, I think that means it's a taco trade. I think Trump has got it in for Switzerland for various reasons. One seems to be pharmaceuticals. But two, I think the Swiss banking industry has upset the Americans over the years. Is that because the US is trying to be forever dominant in global finance, or is it for other reasons?
Lots of people chiming in on the chat there. Neil saying 400-ounce bars for central banks, question mark. That's a question for you, John.
Well, again, the central banks aren't going to pay Trump tariffs, are they? I did read something suggesting that by pushing up the gold prices and the futures prices, that was going to help with the revaluation of gold reserves in Fort Knox, and that was going to help Trump's US balance sheet. I don't know, I don't know enough about the gold market to really know all that, but it's a theory out there.
Did you see the one as well where Elon Musk was at one point suggesting that he was going to check Fort Knox to see whether the gold bars were really there? Did you see that story?
I'd love to be there with him, and actually to really test those bars to make sure they're not tungsten rather than gold.
So speaking of which, you think this is a taco. We've got discerning admirer as well. Given I've got the gold price up, this is the futures price, trader friends. Let's move back to spot there so that we can talk apples and apples. So discerning admirer asking spot gold, is it forecast to fall to 3,314? What do you think of this forecast? It's now 3,360.
I think we're going higher, but who knows what events will come along and move markets? But for me, it's an upward move.
What happens? And I'm being devil's advocate here, John. What happens if we have a breakthrough in Alaska this coming Friday between Putin and Trump?
I think Putin is going to do whatever he can to make Trump look foolish. That's what Putin does. He's got no intention of giving up on his fight in Ukraine, in my view. The only time when he might roll back is if he really feels he's losing the war. It's certainly from the news flow I see, it looks as if Ukraine is doing pretty well with their drone attacks, but equally, Russia did hit one of the big drone factories in Ukraine. So it's moving both ways, and it's a terrible conflict. And I understand why Trump's trying to stop it, but I'm not convinced that Trump has got the cards to do it.
Looking at the chat, discerning admirer saying Wang Tao at Reuters is forecasting the fall. I have great respect for Wang Tao, but as we all know, technical analysis, at least in my view, has to go hand in hand with fundamentals and also what happens in the political sphere as well. John, your forecast for gold is 3,395. And that is the same as your previous forecast, I believe, the last few weeks. So is that still your current forecast, $3,395 an ounce?
Well, we try to be reasonably cautious on our forecasts, but I do think, we're in the gold buying season for the jewelry industry right now. Mm-hmm. They will buy up until October, November. In order to get the stock ready for Christmas. They love to hold back while prices are rising, but they've got to have stock if they want to sell gold jewelry and gold bars to people. They need to be in the market buying now. So it's difficult for them to hold back too much.
Speaking of gold, I messaged you whilst I was away for a much-needed 10-day break. Sarabi Gold wasn't doing well at that point. It has had a bit of a lift right now as we speak. There's a lot of outlook type messaging from the company saying that production is rising and going to rise further. What is your current view? We've got lots of trader friends here that have positions in Sarabi Gold.
Well, Sarabi has probably got the best growth profile for a gold producer in the London market. So from that perspective, it looks really good. The management team are extremely accomplished. They know how to work this mine very well now because they've got lots of experience doing it. So yeah, hopefully, so long as they keep the costs under control, it should go very well for them.
And you've been to see them in Brazil, haven't you?
Many years ago, yeah, I've been to see that one operating in the days when we had to fly over the landing strip and buzz the strip so to get them to remove the oil drums, because back in those days, if they didn't put obstacles on the landing strip, bandits would come in and steal the gold.
Ah, nice. Good to know. Hopefully the person that they're buzzing as you're landing, there's more than one person, so they fall asleep. Someone is there to move the oil drums. I mean, that would be interesting if you can't land with the oil drums in the way.
And I was a little nervous about flying in a single propeller plane across the Amazon rainforest. But actually many pilots have told me that you're much better off in a single prop over those sorts of forests, because if the engine fails, you can land in the canopy. Okay, it's a crash, but you still land in it. Whereas you have a twin engine plane, it's that much heavier, and it's a much worse accident.
Brilliant. Looking at palladium as well, if we may, because palladium has been, let's just show you the daily chart here. It has been moving lower since the high seen in the middle of July, you know, we're now in the summer lull. But does this, in your view, mean that there's further downside for palladium to come? Lots of red bars there seen since July.
Well, platinum and palladium are used for autocats, and yes, lots of people are buying electric vehicles right now, and the electric cars are great. But if you do a lot of mileage, yeah, if you do a lot of mileage, I mean, I spoke to a couple of guys on Friday who both had electric vehicles who said they were thinking of trading them in for diesels because they were struggling with finding places to charge up these cars. They were struggling with ensuring that they had enough battery power for the journeys that they were doing each day. So you've got to be really careful about this. If your electric vehicle says it will do 300 miles range, don't expect it to do that to be able to do that every day. If you're doing a 7,500 mile commute, forget it. You're still going to have to go gasoline or diesel. I think in the next 5 to 10 years, the batteries are going to be very much better in these cars. But I think for right now, if you're doing a lot of mileage, it's not really the best option.
And for those of you that trade this space, I'm going to also chime in there. As you know, I've been doing a lot of test drives with different car marques at the moment. And recently at Jaguar Land Rover, they were saying that especially for their cars specifically, so their brand, they're still seeing no change in the number of people wanting diesel cars compared to their EV offering. And in fact, interestingly enough, they're seeing better support in the retail, second-hand retail space for diesel cars. Palladium, John Mayer's call there for palladium, 1,157. We're currently at 1,140 there. Something else that's been moving quite rapidly in the last week or so, copper. Copper's been a big one. Any copper names that you like out there that you want to talk us through?
Well, look, the big producers, Antofagasta, Anglo American, Rio Tinto, Glencore, BHP, I think they're all, some of those stocks are more into iron ore than they are into copper.
Should you go into the ones that are more into copper rather than iron ore?
I would do that, yes. I think, well, certainly Antofagasta is the key company. Okay, you pay a bit of a premium for it, but it's always worth paying for quality. If you go into other markets, there's First Quantum Minerals. You know, there are other copper plays out there. SolGold in the UK market, because SolGold has the benefit of also having a lot of gold. It's gold and copper. And I think the Chinese are going to buy that one at the end of the day. I think that's the trade there. It's quite an expensive mine to build, and whilst BHP and others have had a look at the cost of building that mine in Ecuador, they've all shied away. I think partially because Ecuador is not necessarily seen as the most stable nation on the planet from a government perspective, and it's pretty socialist as well, which always puts these companies off. But there are other copper plays around. Anglo-Asian Mining, for example, produces quite a lot of gold and will produce quite a lot of copper going forward. So that's always worth taking a look at.
Would you say you're further, John, on the side of those saying that, you know, these export data coming out of China recently, the export data will continue to show, to continue to reflect positively on copper demand? Or are you now erring on the side of caution, given, you know, we've had increasing reports about, you know, trouble ahead for the Chinese economy? Or do you think we've been talking about trouble ahead for the Chinese economy for so long that it's unlikely to come to pass?
I think whatever happens in China, we are going to see increasing consumption of copper within China. And the reason for that is they are building and commissioning so many power generation facilities, nuclear, hydro, solar, wind, and all these things have to be connected up. Okay, the long distance connections can be with aluminium overhead aluminium cables. If you're burying the cables, there'll be copper in that. If you're doing offshore wind farms, tend to be heavy copper cables there. Because electric vehicle chargers, they're copper. Electric vehicles themselves use a lot more copper as well. So there's so much that requires copper, and I think China is still growing. The growth rate hovers around 5%. Okay, if you go with capital economics, maybe the growth rate hovers around 3.5%. It's still a very big growth rate, however you look at it. And that means that their consumption for copper will grow, but it will grow all the more as they connect up AI data centers, and as we'll see more of this in the United States. And there's a lot of grid repair work that needs to be done, not just in China and the US, but all over the world, particularly in the UK, I'm afraid.
Certainly in the UK. I can tell you that with the amount of digging around where I live. Right, we can't talk about metals and mining without talking about the dollar. So I've got whacking up the US dollar basket here for you, because we are still seeing this weaker dollar picture very much in play here. That's going to support, continue supporting metals, and I guess the question here is, with Trump now, increasing the pressure on the Fed, and also the expectation is, no matter which way you cut it, it's whoever is the next Fed chairman, basically Trump is in charge, just as a default. And that means more cuts likely to come. Is that going to be translate into, John, more support for metals, given the dollar is going to continue to remain weak?
Well, Trump's big, beautiful bill is all about raising the headroom, having a bigger balance sheet, effectively printing more US dollars. Now, of course, they'll use that cash. Trump wants to use that cash to stimulate industry. He wants to create growth. And that's his main thing. Now, if spending that cash creates growth, that's good. In many respects, that ought to be good for the US dollar. But of course, expanding the balance sheet and printing more US dollars is fundamentally negative for the dollar. So it's really a question of how well do they spend the money. Many governments don't necessarily spend the money that well. But I think Trump is not focused on social programs. He's focused on infrastructure. He's focused on industry. So if the money is spent on developing new car factories, new lithium-ion battery factories, new mines, new this, new that, maybe there will be extra growth that comes out of this. So long term, I'm a bull on the dollar.
It's a big bet, yeah.
But maybe in the 12 months, perhaps the dollar carries on weakening for a while.
Brilliant. Thanks very much for that very succinct answer, John. Always a pleasure having you on, and we look forward to welcoming you. Loads of questions on the chat, so we will get that to you on email. And if you have any other questions for John, and indeed, I've already seen some here asking where to find your newsletter as well, do message me on ask@ig.com, and also don't forget to hit the like and subscribe button, because that enables us to get you more of this good content. Thanks so much, John. We'll speak offline later. Have a great day, and catch you in a bit. Axel is coming up next, fresh from his holiday, with Trade of the Week and also some technical tips.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind the UK stock market, then we can start to get the interest, and it's days like this. We get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would like cash ISAs to be reduced, not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically, in investing that you can from cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash.
Okay guys, before I teach you how to use this, I have to teach you how to use this, the mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. time to go. Hey, come on, Pat. Cash returns, come on. Oi! Oh, you're not going to get better than cash returns.
Hello and welcome to Trade of the Week on Monday, the 11th of August 2025. Let's get straight into it, and I would like to go short gold. If you look at the daily chart, what we can see here is that we're starting to come off today. We're down about 1% or so, and did so as risk-on sentiment is once again pushing US stock indices such as the S&P 500 and the Nasdaq 100 to all-time record highs. We did so, I think, on Thursday and Friday, and this positive sentiment has led to flight to quality flows that happened beforehand into gold to now turn into outflows out of gold. And for that reason, from a fundamental point of view, I expect the gold price to head back down towards the 3,300, 3,270 area and so. And also the fact that we once again failed around the 3,400 mark, technically speaking. If you go back to the middle of June and also the beginning of June, you can see here, even back in May, we had the gold price sort of capping out around this 3,400 mark. So I wouldn't be surprised that once again that resistance area held. So the question now is, where's our stop loss? If we go short here, perhaps on a minor bounce around 3,375, let's say. Well, if you want a very tight stop, which I probably wouldn't put on there here, that would be above the high seen on the 7th of August at 3,410. But if you want a slightly wider one, you would probably put it not just above the July high, but also above the June high. And that was made around $3,452 per troy ounce. So maybe that's your stop loss. And then your downside targets down here around 3,270, giving you a risk reward which is slightly higher than 1. So today's trade of the week is to go short gold, probably on a minor bounce towards 3,375 with a stop loss at 3,450 and a downside target around 3,270. Hello and welcome back to Technically Speaking, where you can ask me questions about technical analysis or your charts, and I'll look at them from a technical perspective. Now, I was just talking about the gold price and wanting to go short gold on Trade of the Week, but what I didn't mention was last week's Trade of the Week by Chris Beecham, which was to go long the S&P 500, and what a trade that turned out to be. Let's just go on to that one, and we can see here on Monday he went long around the 6,275 mark, and we are now quite a long way higher than that. So why did he do that after this really negative display of these big red candles? Well, as he said, he believed that the market would bounce back, that perhaps the Fed would be pointing towards a rate cut in September. And now that is actually priced in because of the weaker data last week by about 90%. Of us basically seeing a rate cut in September, and that's why the US markets went higher. Also, earnings were still very positive and so forth. And he basically said, well, he believed that was going to happen, and he was right in this case, but also he just used the low seen on the previous Friday on the 1st of August as his reference point for a stop loss. So he just placed a stop just below there. So you can do that if you have a view, whether it's fundamental or technical, it doesn't really matter, as long as you know where your view is incorrect and where your stop loss is. And because here you can see the stop loss is much tighter than the potential reward. I think his upside target is around 6,450 or so. You can see that you have a positive reward to risk ratio, and that's what you want to look at. So that trade worked out quite well. But also casting our eyes back to, I believe, the beginning of July, I had a trade of the week short on here with regards to euro sterling. I believe that was on the 7th of July here. I believed it had topped out, and I was incorrect on that one. As you can see, we went higher. But the important thing here with regards to euro sterling, we didn't get stopped out. Why not? Because if I zoom out here, I didn't place my stop loss just above the previous high made in April of this year, but also because we had a higher high, which was marginally higher if you go back to this area here to basically October and November of 2023. So a long way back, and we placed our stop loss at 87.70. And you can see here that we got very close to that high there going back to 2023 and did so at the end of July. But the high was at 87.63, so close to 87.70 our stop loss, but we didn't get stopped out there. And since then, what we've seen is the move down, recovery on the sterling strength we saw despite the rate cut we saw last week in the UK. But now with that rate cut, the sterling is also coming off again against the euro. The euro is coming off again against the British pound. And you can see here, we are now testing this support area, this uptrend line going back to May of this year. If that were to be taken out, it's quite possible that we may actually retest the low seen at the end of July, and that was made around 86.10. And if we were to fall through 86.10, we could then head lower again. So that is a potential scenario here. If you still have that short euro sterling position on, maybe lower your stop loss now to the last reaction high that was made last Thursday at 87.44, just above that high, or leave it at 87.70 if you can do so. So you can see what we're always doing with regards to technical analysis and trading is to look at what point are we incorrect, where's our stop loss, do we have a higher reward a potential higher reward compared to our stop loss. And with that in mind, I've been asked to look at Pelican, and let's see what we can see on this MP. Sorry, here we go. From Pelican, I was Material Corp. Sorry, Pelican asked me. I've just come back from a holiday, as you can tell. Don't know what I'm doing. And we've got Material Corporation here, all sessions chart, as you can see. And what I always do, because I don't know much about this stock, to be honest, is go back to the longest time frame ever. And I look at the monthly chart here, and you can see that we're trading all-time highs. And we've had a very positive 3-month uptrend at the moment here, very strong upside momentum, these long green candles pushing us higher. Yes, we're overbought, but that in itself doesn't mean much really. It just means the trend is very strong. If I go down to the weekly chart, we can see that we had a consolidation phase, and then last week we had another strong push to the upside. And now on the daily chart, again, we're just consolidating slightly, which is perfectly normal. And we could see something similar perhaps happening to what happened towards the latter part of July before another spurt to the upside may take us to new all-time highs above the 8,174.5 high on this daily financial bet here. So for me, the trend is your friend. You can see a higher high followed by another higher high and higher lows. That's an uptrend. It's a stock that I would keep holding. At what point would you be incorrect? On the daily chart, basically, we would have to fall not just below this consolidation zone area here, but probably all the way down below this low from the 9th of July. So it's a long, long way away. If you want to have a tight stop loss or take profit order, perhaps just below these lows here, below the 17th of July low here at 5,481, because that's where the last low of this sideways consolidation phase was. If we were to come off, it's very likely that we're going to find support around 6,635 and 6,500, because these highs here may now act as support because of inverse polarity. So basically, yes, still very bullish. If you want to go short here, you know where your stop loss is. It's just above the recent high made on Thursday of last week, because that's the highest high. And if we go above a higher high, it's very likely that we're going to continue to go higher. So here, I expect further upside to be seen as this trend looks very, very positive. And let's look at legal in general now. And let's see what this chart looks like. And we can see here that we've been trading in a sideways trading range for quite a while now, and did actually head higher, as you can see on the daily chart. If I go back to the monthly chart, we can see that we made a multi-month high, taking us close to the February highs, but didn't quite manage to do so. But you can see we're gradually rising here and are on track for our 4th consecutive monthly rise. On the weekly chart, we're losing some upside momentum, but I haven't really got negative divergence on the relative strength index. So that is still fine, that's still healthy. And what you can see here is that that high is higher than the high here a couple of weeks ago, and that again is higher than the 9th of July high, June high. So that's on the weekly chart, higher highs. And at the same time, you've got higher lows. Let me just put on here, actually I'll do that later on. So we still have a series of higher highs and higher lows. On the weekly chart, that's still bullish. And on the daily chart, where we've had this big move down on Wednesday, but we've basically recovered from there. So technically speaking, Legal & General still looks bullish. From a medium-term perspective, as long as we stay above the 2nd of July low, because that's where we made this A, B, C zigzag Elliott wave correction here. As long as we stay above there, above, let's say, 245 pence, Legal & General is still looking bullish. On the shorter term chart, if you wanted to have a tighter stop loss in case you're long, you just place your stop below the 249.90 pence on this daily stop loss, below the low seen on Wednesday of last week. But here further upside is likely to be seen. If we were to take out these highs, where are our next upside targets? Because that's also important to look at. Well, as I said, we've got the February high, which was made here at 265 pence 85. That's a potential upside target in the short term. And then longer term, we've got also this high here going back to March of 2023 at 269 pence or so. But yes, Legal & General still looking bullish. Lloyds, another UK bank, you can see here, Lloyds Banking Group also looking bullish, as you can see here. And on the weekly chart, we are continuing to rise. If I go back to the monthly chart, we are now approaching our high seen back in June of 2015, so still very positive here. You may encounter resistance though, because the high seen back in January 2014, this high here at 86.75, and the high here in May 2015, just below 90. So that whole area between 80, let's say 86.75 and 90 might act as resistance going forward. But right now we're still trading below that. We're still heading high on the monthly chart, on the weekly chart as well. That's all bullish. Here, I would probably have a stop loss, perhaps if you're long trading it, not just investing in this share, below the 30th of June low, because that's marginally lower than these previous highs, which should act as support together with the high seen at the end of July in case of a bearish reversal being seen. But it's very likely that we won't even see that, because you can see here on Monday of last week, we had a very strong upsurge, then some consolidation, and now we just continue to edge higher. So basically, as I said, if you are long, trading it, perhaps a stop loss below the August 1st low, but because that's quite close to the low here, the end of that consolidation phase here on the 2nd of July, I would probably place it slightly lower here, below that low here at 72.80, let's say, on this daily financial bed. But yes, looking healthy, a series of higher highs, high lows, still an uptrend. Lloyds Banking Group still looking bullish. Let's look at Kraft Heinz. I've got a question on that one. Let's look at this US stock and see what's happening here. Now here the picture, as you can see, is different because we haven't got a series of higher highs and higher lows. What we have potentially is an A, B, C correction, but the C leg is very extended to the downside. So we'll have to see whether that is really an ABC correction or not, whether this is actually an up move or not, or whether it's just a correction in a longer term downtrend. So what we do is we go back to the monthly chart, and we can see indeed that we've been falling ever since we tried to sort of retest the 2021 highs and the highs seen here in 2022 in May of those years. And you can see every time we tested that area, on the daily financial bed around 4,480 or 90. We failed, we came off. And then basically since January of 2023, we've been going lower. And yes, we may short-term bounce back at this support area here, but if that were to be taken out, the June low at 2,545.5 on this daily financial bed, it is very likely that we will also fall through the August 2019 low at 2,486.5 and head back down again towards the March 2020 low around 2005. So the trend is your friend, and that's still medium to longer term looking bearish. Now, in the shorter term, we've seen 4 consecutive weeks of rising prices, but then last week or the week before, a negative candle here, which was then followed by another positive candle. So we have to see whether we hold above that low from last week, in which case we could see further consolidation and perhaps a further up move short term take us towards the 3,000 mark. But we really need to rise above last week's high, which was made at 2,789.5. So let's just look at the daily chart. And you can see that last week's high is quite a long way away here. We are currently trying to head back up again. Actually, that was last week's high, sorry. So we made that, we were heading higher now. So perhaps short term we could head higher still, but we will probably encounter some resistance once we get into this 2,900 to 2019 18 area. The stop loss, if you are long short term, would be the 4th of August low around 2,662 on this daily financial bed. And from a longer term perspective, probably the low seen back in June, as I said before, on the monthly and daily charts. So if we were to fall below those lows, it's very likely this long-term downtrend we just looked at is likely to continue. Short term, we may continue the upside momentum simply because this stock with other US stocks is being driven higher by the risk-on sentiment that we've seen over the last week, as we expect the Fed to cut rates in September of this year. So yes, this is how you would play it. If you go short, your stop loss is probably just above that high seen at the end of July, 2,918, just above there, because those highs here, that they get taken out, then we may, as I said before, head back up again towards the psychological 3,000 mark. This is the way I would see it, but this is definitely not looking as bullish as the Lloyd's Banking Group or the Legal & General one we looked at beforehand. I was also asked to look at Cameco. Let's do that now. Another stock I have to admit I don't know much about. Let's just look at the chart, and we can see something that I do like, a very nice uptrend here. Some consolidation, a move down, but now a gradual move to the upside. And these consolidations, I mean, don't be afraid by them or afraid of them. These are just buying opportunities in a trend. Here, for example, you've got this ABC correction again, and then you buy here, tight stop below there, and then you just ride it up. And you know, every time you have a minor correction, if the trend is pointing higher, those are buying opportunities. You shouldn't get scared out of a position. You just need to make sure that you place your stop losses in the right way. So if you are long here from these levels, where's your stop loss? You could use the last reaction low, but because the low seen here at the 10th of July low here at 6,932.5 on the daily financial bet is not far below the low seen here on the 1st of August low, I would probably place it below that one, give myself a little bit of breathing space. So as long as that low holds, for me, the trend's your friend still pointing higher. So let's look at the monthly chart. Well, what we're seeing is all-time highs. No, not quite all-time highs, but we're heading back towards levels. Oh no, we are trading all-time highs, sorry. So yes, very strong upside momentum since April of this year. We are on track for our 5th monthly rise here. Obviously the month of August is just starting. We haven't finished it yet, but even on the weekly chart, we can see that we've had a very consistent up move here since April of this year. So right now, further upside is more likely than any downside, simply because of the way the trend is moving. If you go short, then maybe you need to put your stop loss or even a stop and reverse order above the highs seen here at the end of July, around 8,029.5. So maybe at 8,030, you may want to put a stop loss. and revert even your position, because the trend is your friend, and it's likely if you hit that high, that further upside is going to take you to higher levels. And then let me just look at Schlumberger very quickly, because I've got a question on that as well. And what we can see here is the, well, I don't know which one you will want to look at. Shall I do which one, the French one or this one? Yeah, this one here. So let's see what this looks like. And this doesn't look as bullish as the other charts we're just looking at. And you can see here we've been trading in a sideways trading range with a lot of downside momentum. Now, interestingly enough, the Schlumberger chart held in August just below this previous support area, and we're trying to hold around these lows seen back in June of this year at the moment. So the question is, what is the trend doing? And you can see the trend on the monthly chart since September of 2023 has been pointing lower. We have a series of lower lows and lower highs, the definition of a downtrend. That's not bullish. Also, on the weekly chart, we can see that every time we went up, we then had another follow through to the downside and made a lower low. Now, we've been trying to hold since April of this year around current levels every single time we went down there, and then sort of try to bounce off it. So maybe we will see another short-term bounce here. That is a possibility. But if that is the case and you want to buy the Schlumberger share here at current levels, you know where your stop loss level is. It's basically below the 1st of August low. In this case, on the daily financial bet here, just below 3,236. Because if we go through here, the odds are more likely that the long-term trend is going to continue and take us towards the 3,200 area, even lower, than for us to have a bullish reversal here taking shape. So that's your stop loss if you want to go long, a very tight stop. And if you are right on your view, and if we were to bounce back, and if this is an ABC correction in early wave terms, well, maybe we could then rise back towards the 3,600 area where the late July high was made, or perhaps even retest the high seen in July at 3,750 or so. But that would necessitate a stop loss, because if your view is incorrect, as I just said, if we fall through the current August low, then as I showed you here, we are likely to retest the April low, which was made at 3,112.5, and are likely to then also fall through there, and perhaps fall to the July 2022 low, which was made at 3,664.50, and perhaps head all the way down again towards the 3,000 area, because that chart long term doesn't look bullish to me. So it really depends what you want to do. If you want to go short, it might be a bit risky to do so down here right at support. Maybe wait for a move higher if it were to happen to then go short. Or if you want to go short now, your stop loss is probably a very tight one above the 6th of August high from last week, let's say at 3,410, the last reaction high, because that is the last point where the market tried to go higher and failed and then came off again. So if you go above that point, technically speaking, maybe further upside may be seen. So I hope I've answered your questions. Please keep them coming next week, and I hope to see you in the next few days. Thanks, bye.